Hey there, good morning. It's Trisha with Easy E-mini Trade, and I just want to go over a couple ideas of what you can do during this market volatility. Very difficult to trade the indices if you're used to trading NQ, YM, ES, etc. So let me give you a couple ideas of what you can do and see if you find it helpful. So a couple things. Usually I start out marking my support and resistance on my 15-minute chart, and I mentioned before that I leave them all on here, and I've got years and years and years worth on these 15-minute charts. But just to give you an idea, all these lines that you see here were areas that used to be support and resistance. So when I look at that and I see that price is in an area where I previously, had all my support and resistance areas marked, this close, obviously this is telling me that the last time we were here we did not have this kind of volatility, because generally speaking the support and resistance areas were on the 15-minute chart of NQ between 10 and 12 points apart. If we were to look at this 15-minute chart right now on NQ, this is pre-market, but regardless, some of these bars, even, yesterday during regular trading hours, for example, take one of these bars here, and they're more than 100 points in size. There is no way that I'm going to have my support and resistance areas more than 100 points apart, because I know the way that I trade off the smaller charts of a range chart or a 1-minute chart, that we're going to get whipped around and it's going to require a huge stop. So I'm not willing to risk that kind of capital in a whippy, volatile market. So you have a couple options. You don't trade. You can trade the micros. Now the micros will still be moving the same as the regular E-minis, but the risk will be much less, obviously, because they're worth 1/10. The other option is to find something that's not moving so volatile. And actually CL, believe it or not, that's crude if you're not familiar, that has not been as volatile at all. So that's an option also. The other thing I want to point out is that, like I just showed you, all those support resistance areas so close together on the 15-minute chart, we still don't want to trade without knowing where reaction areas are. So just look at it on a 5-minute chart. Just drill down to something smaller where you can see what has happened within the range of the 1 15-minute bar, for example. So anywhere you see like a common area, you just mark it, and that can be your support resistance area. If they're still really far apart, then you drill down to the 1-minute chart. And it's not for any other reason other than to just have an idea of where price may react, so you can take profits in those areas or pull your stops up to those areas. Because with the whipping back and forth, it's very easy to get into a trade, for example, and you could be up 5, 6, 10 points, and then it whips right back to your entry, or worse, back to the stop. So definitely trade the micros or sim trade. There's nothing wrong with sim trading if the market is crazy volatile, and you can still get excellent practice. And that's the thing too, you just don't want to, in my opinion, just give up and not do anything, because it's very easy to lose your edge if you're not practicing every day. And the thing about the market being so fast is that it's forcing you to make decisions quickly, go through your routine quickly, which is really good practice for when the market calms down a little bit. So that also is an option. Also, I would recommend go back and mark the trades after the fact. Like, let's say that you're looking at yesterday, and this is a really large chart on NQ. It's a 16 range, for example. And if it's too small, then you trade a bigger one. And I'm not suggesting anybody trade, in this volatility. I'm just giving you some ideas for if you're, wanting to do anything. And so just go back and mark anything that would have been valid as an entry. So here, for example, valid entry on NQ for the slinky off the 16 range chart, closing above the super trend stop, green line above the red. And then one thing I want to point out, if you're looking at the range chart and you have the 40-point gapper, in this volatility, very often you're going to find that price is going to go sideways to fill that space majority of the time. But because these charts are moving very fast on the, when it's a range chart, you'll find that the red line can move a little bit faster than it typically does. So, so price can find its way, so the red line can find its way to the green, where typically we're saying when you get that 40-point gap, what's typically going to happen is the market's going to go sideways to fill that space, or the green line's going to go toward the red to fill that space. And so still the case, but you'll see that it fills up a lot faster in this current environment. So getting back to marking your trades. So here you get closed below the super trend stop. This red line's in overbought, so this short would not be valid. Here we get closed above the super trend stop, green line above the red, that one would be valid. So just go back and mark them and still go through the routine of marking your support and resistance. Just go through your regular routine and just make sure that if you are sim trading, that you are still sticking to your trading plan. Okay? All right, you guys, I hope that helps. And if you have any questions, shoot me an email. Same on the 1-minute chart. The other thing I want to point out before I say goodbye is, if you're trading, and this is NQ, you can look at YM, you can look at ES. They're going to be a little bit less crazed realistically. And these are all old on here from yesterday. But you'll notice, you can take the setups in a volatile market and just be aware how large the bars are. So like if you're going to take an entry off the 1-minute chart, for example, let's go to yesterday during regular trading hours here. So let's just look at some of these bars. They're pretty large in size. So, if you're getting a buy setup or a sell setup and you think that you're going to get away with, a 4 or 5 point stop, that's just not going to happen. Just for example, let's find a valid setup here. So in oversold here, overbought. Here's a valid, nope, let me see. Let me find one here. All right, here's a valid buy right here from yesterday afternoon. And so you'd be looking up to resistance to take that. But let's say that you're going to take that trade and use the opposite super trend stop as your initial stop. It's going to be very large. Even if you're going to use under the bar that got you in, the stop is going to be very large. The size of this bar is more than 30 points in size. So just keep that in mind, okay, you guys? And don't feel like you're missing out on anything, because the whole point is that, we want our accounts to survive to trade another day. So, this will pass, and just don't worry about, missing out on anything. Okay, you guys? So have a great day, and I'll chat with you all soon.